Hey traders, Nick Shaheen here looking at QuantumScape. I'm going to say QS from here on out because it's a tongue twister for me. So let's put some disclosures out there. I don't have a trade in it. Somebody asked me to write an article about it, so I did some homework and I got up to speed. So nothing here is actually an advice to do anything on this one. I'm sharing my own opinion and the levels that I think matter. So usually I don't talk fundamentals much, but this is right up my alley. I was an electrical engineer in a prior life, so even though I'm not an expert at batteries or circuits at this stage of life, you develop an intuition as to what's feasible and what's not, and what's realistic once a business person tries to sell you their story. So in this case, clearly it came out of the gate like bat out of heck, and then it gave most of it up. Then in early January, it had after the debacle, it had a nice bounce, like it bottomed, but then it gave back up the whole bounce and then a little bit more. Even though it's not a lot of bit more, it's just why the extra juice, right? So finally, it closed that little gap. Maybe that's what they wanted. They being the machines, the gods of stock trades. So I do love the fact where it's standing right now, just from the one candle in December or the end of November. It's like this one right there. This is a doji-ish candle, which is just jargon, Wall Street jargon, to say the market was indecisive. They opened at a place, they tried to love it, they tried to hate it, and then they said, you know what, we have no clue, let's just kick the can. And they closed it about where it opened, and then they decided the next day that they hated it. And then they loved it, and then another doji here, oh, we hate it. Hey, no, we love it, and then I will give it back up. So clearly, they're playing with the investor emotions. So even though I'm not a super fan, I am definitely not a hater. But I'm going to say it right here to get the hate right out of the way against me. I don't think they can do what they say they are going to do, but that doesn't mean that the stock is doomed. So the reason why everybody's excited over this, I think it's EV related. Well, the batteries they have now work in theory, it's revolutionary. If they can accomplish what they're saying, it's like it's a pot of gold. But it's easy to make it work on a small scale inside of a lab and under idealistic conditions. It's another way. It's a completely different ballgame to make it work at a big scale in real life conditions under any temperature anywhere in the world, have it last long enough, and to be under stress of a massive vehicle. So that's a tall order. Time frame, I think they have committed out into like 2024 for production. So I'm all on board with the idea. But when the CEO comes out on CNBC, I don't watch CNBC anymore, but I Googled to see what he said in public. And I think his last name is Singh. I found a bit on CNBC from when after they fell off the cliff 60%. He was busier defending what they said, that was not inappropriate, that they didn't mislead anybody, as opposed to telling me, hey, don't worry about what the stock is doing. Just we concentrate on getting getting stuff done. So I found that odd. In fact, one of his statements stuck out to me. He used if instead of when. He said, if we can do this in a real car on a real road. I'm like, wait, if? No, you're the CEO. You're supposed to tell me when we get this done, you're going to see. No, he said if we can get this done. So he kept repeating, defending the stock, and what they said about the stock and how they didn't, quote, mislead the investors. I don't care what they said. Tell me what they really believe about the company going forward. So I found that a little odd. It's not a deal breaker. I would love to trade the stock. And so if I'm holding a bag from up here, this is not a time to panic out. I have a cluster clearly that's the base of the whole thing, still below me. So it's too late to panic out. So if I'm holding the bag, I would wait it out and see what happens. I can tell you that if it loses 45 or that last stick right here, whatever it is, it's in danger to come into the 30s. Okay, so this is where you throw tomatoes at me, but it's just price action. It's not emotions. I don't hate the stock. I'm just telling you what would happen, and that is not my thesis. I just said if I'm holding the bag, that's not where I'd get out. I can tell you there's going to be resistance into 56 and into 60. If the bulls are able to break out from it, then they can start chipping away. So here's the thing. When we have corrections, usually you bottom out in a process, not a boom, bam, done. It's usually you stop setting lower lows, and you can continue setting lower highs, but you want to stop the bleeding. So if I may mark it up with a trusted marker, so first step is you stop making lower lows, and it looks like, all right, from here on out they stopped that. That's why I said this little poke right there was just a swift kick in the you know what, because it just ruins everything. So, but let's give them, recently it stopped it. You can still do lower highs. So what happens in essence, the range goes from here into a point. Two things can happen here. The bulls get tired and the bears overwhelm them, and they'll do something like this. That's the scenario I just mentioned. Or conversely, the bulls will start making higher lows, higher highs, and hopefully they can establish a trend of higher highs and higher lows, right? But that is the tough task. First step, stop bleeding. Second step, start building momentum. There will be a fight at 60. So let me see if I can show you without all this scribble. So let's say it gets there to 60 and it fades the first time. Totally okay. Because then what happens is they developed a battle zone, demarcation zone, line, neckline. It looks like an inverse head and shoulders. Call it what you want. Cup and handle, inverse head and shoulders. It's bullish if the bulls can prevail above it. Once they make sure that it's good footing, on to the next one, which is the line where I have that orange dotted line. Now this one will close the gap here. I don't think either of these lines are going to be easy. I'll tell you why. This line right here, so everybody knows what these bars are, right? This is volume down here. Well, they tell me when something happened. Not very meaningful. These tell me where they happened. Well, we're gone off the page. Where they happened. So I know that this orange line is for this period of time, this was the busiest place. So once they come back up to it, the buyers and the sellers are going to be frantic. Frenetic, if you want to use a fancy term. So there's going to be buy, sell, buy, sell, buy, sell. Therefore, it's going to be resistance on the way up. It's not a wall. It's just resistance, like sticky muck. And the other two lines above it and below it make the whole zone sticky. That's good from when it's falling. That's why it stabilizes in here. And that's bad when you're trying to get out of it. So it's like you're falling off a cliff and you land into quicksand. That's good because you're not going to slam into the ground. You're slamming into something soft. But then you can't get out of it either easy. I just made that up. Anyway, trust me, I'm not a hater. I want them to succeed. How cool would it be to have a better technology for batteries? Smaller, lighter, ceramic-covered cathodes and anodes. What? I mean, that stuff is like the different. So lithium ion was a great improvement, but going into something like what they promised they can do, it's like hitting warp speed in Star Trek and going, the whole ship disappears. It's a ball game changer. So I don't think they can do it in the short period of time, but that doesn't stop me from trading the upside opportunities that are in here. So if I were a betting person, just purely on, if you twist my arm and tell me what do you want to do, I'll take a bullish bet with a tight stop. I don't want to find out what happens under this line, but I do want the opportunity to play the upside. I should wait for a breach of a prior fail, so at least 53.2-ish. But knowing that there's going to be a lot of muck. I could use the options to limit my risk, either by selling put spreads or buying debit call spreads out in time. This way I'm not watching every tick, and if it falls on a day, I'm not like freaking out. I can when you buy a call spread, I'm risking a lot less than buying the shares outright with no room for error. So here's one thing though I want to share from personal experience. Averaging down in an iffy stock, this is an iffy stock. They're trying to do something incredible. There's no guarantee they're going to be able to do it per the CEO himself. So for me, To believe in his company more than he believes in this company is stupid. I can't be averaging down. So if I bought it here and I'm down here stuck holding a bag, I do not average down. This can go to zero in theory because they may fail altogether. Just like Webvan did, it was a great idea. I keep using it as an example. It was grocery delivery from the internet. At the time, it was called the information superhighway. It failed. Nowadays, it would be a huge boom, but it failed back then. So great ideas don't always make it the first time around. So I would not average down. If I'm holding the bag, I'll hold the bag and see what happens, or bail out of it and call it, hey, you know what? You don't win them all. But to double down with more speculative risk, let me share something, my opinion of risk. If I ask the definition of risk in a room of 1,000 people, not one person will give me the answer I want, because it's really two pieces. Other than the carrot that you're chasing, there are two pieces to the risk. One is the size of the risk, and you determine that the day you take the trade, because you see the risk, you allocate X dollars, and you say, I'm willing to lose that. And then the second part is, what are my odds of success? That's the part I manage. And that's when I say, you know what? I don't like my chances anymore. I took the risk. I'll take my lumps and move on. Or I'll double down. In this case, no way I would double down because it's an unsure bet. The CEO is not sure of it. Why should I be? Nick signing out.